Hello, everyone. Welcome to our weekend series dedicated to price action based technical analysis. I hope you're having a fantastic weekend out there. Today, we are going to be revisiting the XAUUSD chart, particularly after a remarkable past week where we made significant gains by strategically navigating the market dynamics surrounding the FOMC announcement. Though the week started with an extended sideways activity, but at the end of the week we managed to secure over 1,500 pips in profit through well-timed buy and sell positions. If you happen to have missed out on our daily commentaries for educational purposes, you can catch up using the links provided in the description box below, or simply by clicking the link placed at the top right hand corner if you're tuning in through my YouTube channel. Well, the recent surge in optimism in the US economy propelled the US dollar to a 3-week high. This upward momentum has had a noticeable impact on commodities, particularly safe haven assets such as gold, leading to what appears to be a retracement of the impulsive leg that tested the all-time high zone around the $2,223 zone, as you will see here. Taking into account the general positive risk sentiment prevailing in the market, our focus today is to assess the current market structure. We aim to discern the validity of this recent retracement and gauge the likelihood of an uptrend continuation, or alternatively, the potential for further decline in the price of gold in the coming week. As always, our analysis will blend technical and fundamental perspective, leveraging tools such as the economic calendar, trend lines, key levels, and chart patterns to decipher potential price movement in the coming week. Before we proceed, it is important to reiterate that this video is intended for educational purposes only and should not be considered as financial advice. While our aim is to enhance your understanding of price action analysis, it's crucial to acknowledge the inherent risk associated with Forex trading. Exercise caution and consider seeking guidance from a qualified financial advisor before making any investment decisions. With the groundwork laid, let's now dive into the detailed analysis. So our point of contact for this week is going to begin from the daily time frame, where I took into consideration the character of price action since the month of October, and it's obvious that price action has been very bullish, and in fact, after connecting the series of higher lows here, we have a couple of ascending trend lines to buttress the strength of the buyers in this market. Now, following the strong impulsive move that started here in the month of February, you will see how price action broke out of that 2,145 level, a level which was at some point in the month of December of last year was serving as a strong selling niche. And ever since price broke out of this level right here, you will see that in the last couple of weeks, price action had remained confined within a range bound structure that is between the 2,195 level and the 2,145 area, to emphasize the prevailing uncertainty in this market at this point in time. And the question going into the new week is, will this old range bound structure evolve into an uptrend continuation pattern where the breakout of the resistant line of that range at the 2,195 level will incite an uptrend continuation, or are we going to be seeing a reversal setup come up from the structure where the breakdown of the 2145 level could incite selling pressure into either of these ascending trend line? So to navigate this current market dynamics, I've been able to identify a simple trading setup on our 4 hours time frame. But before we go into the details on the 4 hours time frame, it is our culture in this community that we keep tabs with the fundamental factors that will be affecting or influencing the sentiment in the market for this week. Now, by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. So based on the asset we are looking at this week, we will be focusing on economic features from the United States alone. Now, the first impactful event for this week is going to be coming up on Thursday, that's March 28th, and that is the gross domestic product annualized for quarter 4. This is a key economic indicator representing the annualized percentage change in the country's real GDP during the fourth quarter. Anticipation of this event can significantly impact market sentiment as it provides a comprehensive view of economic health and growth. A higher than expected GDP growth often strengthens market confidence, leading to positive price action and potentially influencing central banks' decision on interest rates. Then the other impactful event we will be looking forward to is coming up on Friday, that's March 29, and we are going to be looking at the core personal consumption expenditure price index. This measures the average change over time in the prices paid by consumers for goods and services. You see, the anticipation of this data influence market sentiment as it provides insight into the inflationary pressure in the United States, and this obviously will help us to understand the possibility of the Fed's monetary policy tightening for this year. So these are the events we are looking forward to this week, and we do understand that the anticipation of this event has a way of influencing the market sentiment. So going back into the chart, we shall be scaling down into the 4 hours time frame where I have a simple trading setup to guide our decisions for this week. So here on the 4 hours time frame, what I did here was to take into consideration the character of price action since the second week of this month. That's an historical data of about 2 to 3 weeks thereabout. And you will see here, look at the structure closely. Our key level identified on the daily time frame still remains intact, and in fact it is serving as a strong demand zone in the last couple of weeks. Now if you look at the structure closely, you will see that every attempt by the sellers to break through this area has been met with strong resistance from the buyers, giving us an insight into the strong buying power we have around this area. So that is why I labeled this area our demand zone for this week. And obviously when price action remains above the demand zone, and of course our key level, we want to be looking out for patterns and structures that supports the idea of buying this asset. Now, in addition to that demand and key level, this is this descending trend line. As you will see, in the last couple of weeks, price has been finding some series of lower highs, and something interesting happened last week following the FOMC announcement. We saw price break out of that descending trend line to incite that uptrend move. And from a technical standpoint, whenever price action breaks out of a key structure like this, we do expect that price may come back to retest the structure, which interestingly shares a confluence with both the demand zone and that key level in an attempt to continue the uptrend move. So at this juncture, you would agree with me that we are at a crucial juncture in this market where, depending on how market participant reacts to the zone at the beginning of the week, will determine what our next line of action will be. If we continue to see buy pressure around this area at the beginning of the week, maybe like a double bottom structure or any form of reversal pattern, we want to be buying the breakout retest of the neckline to join the uptrend move. However, if price action in any way breaks down this demand zone and key level at the 2145, then price action will be back below that descending trend line. So this emphasizes that we are within seller's territory, and of course we shall be looking out for patterns and structures that supports the idea of selling this market. So you can see how crucial this area is, but trust me, I will be with you in the comment section at the beginning of the week after monitoring how market participants will be reacting to the structure to give you an insight into what I will be looking at the first day of the week. If you have found this content helpful and useful in making your independent trading decisions for this week, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.